Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
We caught up with Arvind Sanger, managing partner of Geosphere Capital, earlier in the day to understand the current market texture, what he thinks of the rally, whether there is more upside. Here's what he had to tell us.
The most heartening thing is that the earnings are starting to show up in a meaningful way, and the economic data in India, other than obviously what's going on with the rupee, the economic fundamentals from a bottom-up standpoint are very solid.
You reckon the the 3 or 4 month period that we had of a big bear market in mid-caps, is that over?
I think it looks like the mid-caps are also riding the wave of good economic fundamentals. So, again, the global risks notwithstanding, and I think the global risks, we have lived through some of the fears. Global trade war, that fear seems to be somewhat receding. It doesn't look like that's about to break out in a big way. And Fed rate hikes, I think the market's gotten used to the fact that the U.S. Fed is on a steady rate improvement cycle, but is not looking to do anything dramatic that'll cause liquidity to dry up. So as long as the global cues remain well behaved, the Indian economic fundamentals are such that there's no reason that the mid caps should be left behind. And I think the Indian HNIs and others who were hurt in the last few months with the massive sell-off that the mid caps saw, you're starting to see money come back. So I think all of those reasons suggest that mid caps should also start to participate. So yes, one of the things that you mentioned that I think is very important is we had talked a few weeks back when the rally was very narrow. What is encouraging now is that the rally is much more broad-based, and I think that that's a more solid way for the rally to have legs.
Actually, I wanted to take that point forward because we are seeing a sort of a secular move in the market over the last couple of weeks. Whether you talk about participation coming in from L&T, corporate lenders have picked up. Reliance, of course, has assumed leadership for the last few months. Where do your preferences lie now? We
think some of the export-oriented auto parts companies are certainly benefiting from a weaker rupee. The IT names obviously are benefiting from weaker rupee, but the economic fundamentals domestically, there were some fears about what's going on in the CV market because of certain regulatory changes. But I think the CV market seems in good shape. I think the domestic auto market seems in good shape. I think the infrastructure spending seems in good shape. So plays on all of those, and then Reliance is really a play on domestic, both consumer. In terms of the retail franchise and on Jio and their telecom franchise. And I think there's good strength and there's future opportunities as the broadband distribution in India grows. People who benefit from that or play on that could be winners as that plays out. So I think there are emerging themes. I think some of the banks, laggard banks like ICICI Bank have been huge winners as people are getting past the concerns about the leadership issue and looking at the fact that economic fundamentals are improving and the bad debt cycle, whether it's for some of the PSU banks or for some of the lagging private sector banks are behind us. So I think the financial sector, there are some of the laggards that look quite interesting in that space too.
Arvind, let's not forget we are almost at August end. Just 2 or 3 months to go for 4 big state elections, and then of course next year the general election. There was just one opinion poll about 2 weeks back which indicated that perhaps things could not be too good for the ruling party, at least in the 3 big states. You reckon as we move forward that could be a bit of a spoil spot for Indian market?
If you look at the headwinds for the market, then the political uncertainty leading up to the elections, which for the Lok Sabha, which I guess could be held any time between later this year and May of next year. We don't know when those will be, but that will be an overhang on the market. I think the current account deficit and the rupee and what happens there is another headwind for the market to the extent that it affects inflation. But certainly for us as overseas investors, rupee dollar is a headwind, and then global cues on trade war and other things that could upset the apple cart. So those are things. But India specific, I think the 2 things to worry about are the elections and the rupee and the current account deficit.